Welcome to Creating Wealth with Jason Hartman. During this program, Jason is going to tell you some really exciting things that you probably haven't thought of before and a new slant on investing. Fresh new approaches to America's best investment that will enable you to create more wealth and happiness than you ever thought possible. Jason is a genuine self-made multimillionaire who not only talks the talk, but walks the walk. He's been a successful investor for 20 years and currently owns properties in 11 states and 17 cities. This program will help you follow in Jason's footsteps on the road to financial freedom. You really can do it. And now, here's your host, Jason Hartman, with the complete solution for real estate investors.
Welcome to the Creating Wealth Show. This is episode number 176, and this is your host, Jason Hartman. Thanks for joining me today. I know it's been, about a week and a half maybe since we produced our last show. We have been very busy, and I'm actually glad to say that business is booming. It seems like on the real estate side of things, I have a couple of different businesses going on here, but on the real estate side of things, people are really sensing a bottom or a near bottom in many of the markets we recommend. Of course, we don't think this is true in some of the bubble markets like California. We think those markets, and not just California, but I happen to mention it because we're here, and many other markets around the country still have some severe pain ahead. But in the markets we're recommending, we think we are getting pretty darn close to a bottom, if not having bottomed out. But I want you to remember something. When you consider investment and you look at it like an income property bond, which is one very legitimate way to evaluate your real estate investments. I had one of our investors who really bought a property. He didn't buy this one through us, but he could have, who knows, who bought a property during the peak of the market. And he was kind of complaining that this property had gone down in value. And he said, even though it's gone down in value, my income has remained the same. And so when you look at it from a buy and hold perspective, which, by the way, is what our guest will be talking about on the show today, after I chat with you for a few minutes here, about buy and hold investing, it is really an excellent bond investment because the return on investment, just based on the down payment versus the income, is still very good, even though we're in the midst of the worst economy in 7 decades. And this guy who I was talking to about it bought his property at the peak of the market. So even when you make a perceived mistake like that, it's still, if you know how to properly evaluate your real estate investments, your income property, because it's a multidimensional asset class, it still may actually be a pretty darn good deal. Now, it may not be a good deal too. I'm just saying if you know how to properly keep score, you may be pleasantly surprised. Some people, they don't understand that, and that's why we delve into that and many other important subjects on this show. I want to also tell you that many of you have heard, if you've been listening for a while, that I have been successful in modifying 11 of the loans on 11 of my properties. Some properties have 2 loans on them because they'll have a first and a second. A common way this is done is through what's called an 80, 10, and 10, where you put down 10%, you get a 10% small second from the bank, and then you finance 80% on a first loan. And some properties have 1 loan, some have 2. I try to maximize my leverage position every time I can. It's interesting, I was talking to a guy today who, just like so many, did not get it. He said, I want to pay cash for my properties. Look, if you have to pay cash, go ahead and do it. But if you are purchasing an investment with self-liquidating debt that is not speculative, that is not based on something great happening in the future, namely appreciation, then hey, your debt is sustained by the property as long as all of your numbers and evaluation and due diligence is realistic. There is no good reason, unless you have to pay cash for your properties. Now, if you have to, some of our markets actually lend themselves pretty good to cash deals. But given the choice, if I can finance, I'd rather finance. As long as the rates are good, the debt is self-liquidating, in other words, self-sustainable, then leverage is better. Anyway, back to the loan mod subject. So I've been modifying my loans. I was successful early, and this was about, a year and a half ago, I guess, that I modified 11 of my loans. I got some very nice loan modifications, and I didn't go delinquent on any payments. I got them without any derogatory information on my credit report or anything like that. And I was successful right out of the chute, modifying 11 of my properties. It was very good news. I felt very confident. Published a little product called the DIY Loan Modification Kit, the Do-It-Yourself Loan Modification Kit. You can check that out at jasonhartman.com. We just had, I noticed another order come in a few minutes ago on that one. And it's just a little $47 kit, audio and PDF file that kind of explains the loan modification process. Now, some people have asked in that loan modification kit, why don't we address investment properties? Here's why. There is no program that I know of that specifically addresses investment properties for loan modification. Some lenders will even tell you that they won't modify investment properties. Listen to me. This is simply not true. I have modified, well, when I modified those first 11, 10 of them were investment properties. One was my own home. But last week, I got the good news that I had now successfully modified 3 more. Those were not as easy, but I can tell you those were with Bank of America. And Bank of America was, at the beginning, pretty darn stupid in the way they were handling all of this stuff. If you have a B of A loan, which was probably originally a Countrywide loan, Countrywide seems like it was the fraud capital of the mortgage lending universe. I believe their CEO, Anthony Mazzillo, is still under indictment. Not sure, haven't been keeping up with the news on that, but I know he was in trouble at the beginning. And they finally seem like they've kind of gotten their act together, and they are really now modifying loans. I'm hearing good things. So if you have Countrywide B of A loans, get them modified. Call them up, handle it, get the DIY loan mod kit, get some tips there. And these loan mods are like free money. Let me tell you how incredibly good one of those loan modifications was for me. It was a property in the greater Houston, Texas area, renting for $1,300 per month. Single family home, I bought it brand new, and it wasn't a bad investment when it didn't have a loan mod on it. It was pretty good. It was offering a decent return, which I don't have that calculation in front of me, but it was not bad. Nothing wrong with that deal at all. But post-loan modification, they turned that property into a fantastic, highly positive cash flow property, where my first and my second trust deed, I had a 10% second, they cut the interest rates on both of those in half for 5 full years. And it turned out that the first and the second, the total payments on those are just around $500 a month. I have to pay a very small association fee on that one. I think it's like $25, $30 a month, no big deal. Property taxes, which in Texas are fairly high, and then I have to pay insurance. After all is said and done, post-loan modification, and I didn't have to pay anything for the loan modification, they have turned that property into a phenomenal little deal with really nice positive cash flow. So do not give up on your loan mods. I know some people have been discouraged, and that's why I want to mention it. I want to talk to you about a few more things here. Here's another one. Property managers. Property managers, some are great, some are mediocre, and some are really crummy at their job. The thing we offer you through my real estate investment company, Platinum Properties Investor Network, is we offer you the opportunity to get leverage on your property manager. What do I mean by that? We've talked about it before on prior shows. When I talk about leverage, what I say is, look, you should diversify your portfolio a little bit. Be area agnostic. Diversify. Do not have all your eggs in one basket. Own properties in a couple of different cities so that you spread it around, you spread the risk a little bit. The problem with diversification like that is this, is that when you hire your property manager, you don't represent a big account to them. And the property manager may have 100 or 300 accounts. And as such, they may not give you that extra attention that you want. But if we refer that property manager to you, we probably have several dozen, maybe even over 100 or 150 accounts with that manager. Well, if you ever have trouble with your property manager, contact your investment counselor here at my office, and we will call your property manager, we will email your property manager, and we represent a big referral source to the manager. So that can really help you get better service. We have definitely experienced that over the years. But I want to tell you about one of my property managers who got out of the business several months ago. And I don't believe I mentioned this on the show yet because I really kind of wanted to experiment with it and see how it would work. Now, this property I'm talking about is in San Antonio, Texas. I have never seen this property in my life. Never saw the property. And when the property manager got out of the business, he sent me a letter saying, hey, I'm giving up, and here's another manager I'd suggest you call if you'd like to hire them. And so I called that manager, went on the internet, kind of looked at some other managers. One of the managers sent me over the agreement. It was one of those things I just didn't get around to signing it. Well, my tenant called me up and said, hey, you know what? Where do I send the rent? And so I gave him my address. And I have now been managing this property long distance. What is San Antonio? About 2,000 miles from me, maybe 1,600 miles away, something like that. And I have been managing this property myself. Sight unseen, no manager, no management fee, no nickel and diming, no problems. The tenant has my email address. They have my phone number. I think they've called me one time and I've talked with them on the phone. Never met the tenant. And you know what? I have to say it's working out pretty darn well. And I'm really starting to think that I should manage some of my own properties long distance. Now, listen to me. Be careful with this. We've had a few clients do it, and so far as I know, it's worked out all right. But if I ever have a problem, say that tenant doesn't pay next month's rent, well, the next day, I can just go on the internet after I don't receive his rent. I can call up another property manager and hire one in a day. It's easy to do. I can call up an eviction service, an attorney service in that city and hire one instantaneously. So if you're a novice, if you're not experienced with this, if you're not good at dealing with a tenant, I don't want to recommend this to you. But if you've been doing this a little while, I think it is possible to manage your properties from afar yourself. I'm having good luck with this one. We'll see how it goes. I'll let you know if there are any problems in the future. But I just wanted to say that's an option. Think about that. If you ever run into a problem, you can just hire a manager immediately and they'll take over the account. But basically that adds up to about $1,200 a year in extra income on that property. So I kind of like it. I've managed my local properties always by myself, but the properties out of state around the country, I've always had managers. I want to talk to you for a moment about the Gulf Coast. The oil spill. Now, we are, 88 days into the oil spill. Obama is almost ignoring it. It took him, 40 days to talk to the head of BP, and he's just sitting there making jabs at them. He's taken 3 vacations. He's done numerous fundraisers for his political cronies. Anyway, I won't get off on an Obama tangent. It's a huge disappointment. Certainly not change we can believe in. But here's what I want to say about the oil spill. I am somewhat concerned about this oil spill and its effect on Gulf properties. Here's what I mean. I have heard some of these fearmonger people talk about the pollution issue, the rain, things like this. That concerns me a little bit. I don't know if there's any validity to that or not. It looks like they're getting that oil spill under control. And in fact, I didn't hear the news today. Maybe they have now capped the well and they've stopped the leak. Hopefully, let's just pray that that is done, because this is just a terrible, terrible tragedy. Which, by the way, I don't think, just so you have my take on this, that they should have ever been drilling that deeply. There are so many places that oil companies could be drilling on land in Alaska, for example, that the environmentalists have chased them out. They could be drilling much closer to the coast in much more shallow water. We just are not at the point where we have the technology to do this deep water drilling. We can do the drilling, but obviously when there's a mishap like this and you're dealing a mile below the surface of the water with a well that goes 2 miles deeper than that, think about that. That's 3 miles total, about 15,000 feet deep, right? And the pressure under that much water is equal to 150 atmospheres. And that oil well is gushing out at 1,400 pounds per square inch PSI. That's just a giant challenge. We should not be drilling there yet. We're not ready for that type of stuff. We should be drilling closer to land in shallower waters, and the government and the environmentalists have got to loosen up on these restrictions. Because if they did, this accident, had it happened on land or closer to land, could have been resolved and fixed in a couple of days. The destruction would have been containable. This is a disaster. Back to the real estate issue. I've been thinking for the past 87 or 88 days, however long it's been, about the oil spill and about the effect on the economy. Certainly, it is bad for tourism. It is bad for fishing, the fishing industry there. It's good for the cleanup industry. And I've kind of been wondering if the economy that's hurt, the fishermen are hurt, the tourism industry is hurt. Now, BP is going to be stimulating the economy there through that $20 billion fund, where they'll be just writing checks to people for loss of income and so forth. But will the real estate market there in a way almost improve because there's so much attention paid to that area, because there are so many geologists and environmental people and cleanup people that are moved into that area to take care of this disastrous, tragic, terrible problem? The answer is I don't know. But in the absence of really knowing the real effects here, and it's the pollution part that scares me the most, I would not be buying property in the Gulf Coast until we know more. There is a company, by the way, named Hanover Companies, who has been trying to get our business for several years, and they have really been very aggressive, I'll say, that's to put it sort of nicely, in bugging me to do business with them and to recommend their properties. And before the oil spill, I just never thought the properties were a very good deal. I thought their price per square foot was rather high. They offered this rent guarantee that I thought was really not very much of a sure thing, because what happens in a lot of these rent guarantees is the entity providing the rent guarantee will be an entity that could easily go bankrupt. And then they have to honor the rent guarantee. Even if the larger company that sells you the property says they sort of use their name and their brand, that's not the same company you're actually doing the rent guarantee deal with. I never liked that. We've seen that happen with developers where they'll go bankrupt and then there's no rent guarantee any longer. So I just don't like the complexity of that. I like to evaluate things based on a real market and a real deal. If there was no rent guarantee, will this property rent easily for the amount you're projecting? And I just never liked that deal. But this company sells in the Gulf Coast. I own several properties on the Gulf Coast, so believe me, I'm right here, and I understand because I've got properties in Mississippi, in Alabama, and in Pensacola, Florida area. And I would not be thinking about the Gulf Coast right now. Now, you know that many times I'm a contrarian, and I think that the time you got to go in and do deals is when there's blood in the streets. So my opinion may well change about this, but if you ask me today, if you ask me 2 weeks ago, I'm going to say just wait. And let's see how this develops. So stay out of the Gulf Coast for now. That's what I would say. The furthest I would go is Houston. And I do like Houston. I own properties there, and I like that Houston market. I don't think that's a market you should worry about because it's not really affected like Louisiana, Mississippi, etc. Now, in addition to the oil spill, I want to talk to you for a moment about inflation. Several of you commented on my show number 174, where I interviewed the National Inflation Association folks on that show. And that was a good show. And I read a good paper that they put out, their 2010 inflation report. And I want to tell you that I am pretty much in agreement with their interpretation of the real inflation rate, which they say is currently at just over 5%. I think they said 5.2%. And a lot of people think we're actually in a deflationary time right now. And that is true of some assets where we have monetary inflation and asset deflation. But I ask you to look at your own life. Look at the cost of energy, look at your utility bills, look at your automobile gasoline, look at your food cost. And I think you will easily see that inflation is over 5% annually in the midst of the worst economy since the Great Depression more than 7 decades ago. Think about that. What does that mean to you? Well, think about it. If you have $1 million in self-liquidating or self-sustaining real estate debt right now, and you have 5% inflation, then in real dollars, not in nominal terms, but in real terms, you are having your debt repaid through what I call inflation-induced debt destruction to the tune of $50,000 per year. 5% of the amount owed. Actually, in this example, it would be $52,000 a year. $52,000 a year in contribution to pay down your debt from inflation. And let's just wait a few years till we see some hyperinflation, which I think most credible people say is coming, including yours truly. Again, that's a prediction. Nobody knows for sure. I think it has to come at some point. Exactly when, we don't know. but I think the next few years we're going to see it. When we get to the point where we have 10, 15, 20, 25% inflation, real inflation, not the official statistics. When we get to that point, think about the debt destruction you will incur and you will absolutely love. That will just basically pay your debts off for you. What a beautiful thing that will be. Again, this is not to say go out and stock up on bad consumer debt. This is good debt. This is self-sustaining debt, self-liquidating debt. Against what? It's against packaged commodities. The construction materials, the ingredients to build a house, a mobile home park, a self-storage facility, an apartment building. These ingredients go up in inflationary times. So that's a good thing. All right. Couple quick other announcements before I go and we get to the interview here. Join our text club. Send a text from your cell phone to 411-247. That's 411 like for information, 411. And then 247 like 24/7, 24 hours a day, 7 days a week. Easy to remember. 411 24/7. The keyword is Jason, and then put a space and put your first name and then another space and put your email address. And we have an event coming up on July 31st, our Creating Wealth event. And we'll probably give away, 2 or 3 freebie tickets to that. Those are $300 each. So you can get those tickets if you join our text club. We also do some other great promotions on our products in our store at jasonhartman.com. So that's it for today from me. Got a couple of important things next time. And let's go to my recent interview with Steve Dexter. And he basically made a deal on a great book where he sort of assumed the rights, I guess you would say, to republish and update a great classic real estate book called Buy and Hold. And I think you'll really like this interview. He's also the author of a couple of other books. He's been on the show before a long time ago, and it's good to have him back. And next time, we're going to be talking with Cliff Ravenscraft. He is the podcast answer man. So if you've ever been interested in doing your own podcast, your own radio show, I think you'll like that next show. A couple other guests we've got coming up. Bruce Norris with the Norris Group. He's a fantastic real estate prognosticator. We've got a credit expert talking about how to enhance your credit report with Credit CRM, Edward Jameson. We've got a branding expert coming up, a memory expert. I think you'll like that show. We've got a Google Analytics expert. I recorded that show. And Justin Catroni was a fantastic guest. Really, really interesting. And we've got show number 178 is going to be about self-storage investing. So a lot of great stuff coming up. Stay tuned. And we'll be back with the interview with Steve Dexter right after this in less than 60 seconds.
What's great about the shows you'll find on jasonhartman.com is that if you want to learn how to finance your next big real estate deal, there's a show for that. If you want to learn more about food storage and the best way to keep those onions from smelling up everything else, there's a show for that. If you honestly want to know more about business ethics, there's a show for that. And if you just want to get away from it all and need to know something about world travel, there's even a show for that. Yep, there's a show for just about anything. Only from jasonhartman.com. Or type in Jason Hartman in the iTunes store.
My pleasure to welcome back a guest that we had on a long time ago. In fact, we had Steve on in the first, I think, 10 shows that we did, and now we're into the 170s and 180s and 190 episodes here.
Jason,
so
that's awesome.
Yeah, so Steve, welcome back. It's good to have you. Steve Dexter, who is the author of 3 books. Most recently, he co-authored Buy and Hold, which is a famous book written by David Schumacher, and it's now called Buy and Hold Forever, How to Build Wealth in the 21st Century. Welcome, Steve.
Thank you, Jason. How are you?
I am doing fine. It's been about 3 years since I saw you last. I think we had lunch about 3 years ago.
I know. You've been prospering and really been out there a lot. I really think a lot of people appreciate what you do.
Well, and you too, my friend. It's good to have you back on the show. Tell us about Dr. Schumacher and why you ended up sort of co-writing this book after he had passed on.
Well, Jason, we all need coaches and mentors. We all need people to help us. And what better source than Dr. Schumacher, a real estate veteran since the late 50s who bought fourplexes and units in Hermosa Beach. He began his real estate career at a time when real estate was not really well recognized or a glamorous place to be. And he's kept on with this sort of thing, and all throughout the 60s, 70s, and 80s, and all into the 90s, he kept buying property. I learned about Dr. Schumacher through a real estate club, and people said, I need to go listen to this guy. At the time I got to him, he was about 82, 81 years old, and he was half blind, but he had a great mind. So I picked that mind every chance I got. And his definitions of value, his strategies on when and where to buy, his strategies on finding quality neighborhoods, all just really resonated with my investment strategy. So when he died about 3 years ago, his widow contacted me saying it was Dr. Schumacher's dying wish that you, because I'm an author too, at that time I already had a book come out, that you would update his book and put all your own stuff into it. And so that's what you have before you, is buy and hold forever.
Thank you for listening to the Creating Wealth Show. This is Jason Hartman, your host, and we appreciate you following the show. We have many episodes, hundreds of episodes, and some of the older episodes have been archived and placed in our members section, and that applies to this one. So we include a sample that's about 25 minutes long, and then for the rest of the show, you can go to our members section at jasonhartman.com. Many of the other shows are still in their full-length, complete version. However, some of the shows, like this one, are in our members section where you can hear the show in its entirety. And again, you just need to go to jasonhartman.com and you can get the full show there in the members section, plus a whole bunch of other great members benefits and resources, whether it be documents, forms, contracts, articles, other video and audio content. Just a great resource. So be sure to join as a member at jasonhartman.com. And thanks again for listening to the Creating Wealth Show.
This show is produced by the Hartman Media Company, all rights reserved. For distribution or publication rights and media interviews, please visit www.hartmanmedia.com or email media@hartmanmedia.com. Nothing on this show should be considered specific personal or professional advice. Please consult an appropriate tax, legal, real estate, or business professional for individualized advice. Opinions of guests are their own, and the host is acting on behalf of Platinum Properties Investor Network, Inc. exclusively.